Hello, everyone. My name is Jack Greenberg. I will be your host for today's episode of the Small Cap Insights podcast powered by Darrow Associates. Thank you all for joining us. We are a leading full-service investor relations firm focused primarily on micro and small cap equities. Joining us today is Adam Wilk, the founder of Greystone Capital Management. Adam, it's great to have you. Of
Great to be here. Thanks for the invite.
course. So I'd like to start off the show with a little bit of background. Can you tell me a little bit about your career, what led you to starting Greystone?
Sure. Yeah, the sort of 2-minute pitch is I founded Greystone Capital Management in 2019. It's been, or the end of 2019, so it's been a little over 5 years. And we are long only micro cap to mid cap focused, I'd say, strategy. So looking for good businesses, good management teams, and cheap valuations. And ideally trying to find, I think, businesses in transition. So not turnarounds, but situations where normalized earnings power is not being recognized or valued appropriately. We run a concentrated strategy. Our top five positions make up somewhere between 65 to 70% of the portfolio, which is made up of 10 to 15 stocks, with the highest at cost weightings around 15% and the lowest around 4 to 5%. And the team consists of myself as the CIO, founder CIO, portfolio manager, and then I have some outsourced back office partners as well. My background includes time spent in the NBA. Actually, I started my career in sports, working for the Spurs and the Rockets as a scout and analytics employee in the front office. And then I transitioned after that to some work in commercial lending with a couple large banks and got some formal credit experience as a senior commercial lender. So I mentioned we just passed the 5-year mark in terms of the founding of the firm and track record, and have done around 24% net during that time, outpacing the S&P 500 and the Russell. And a chunk of the capital is my own, and a large part of my family's net worth is invested in the strategy. And I kind of view it as unique and differentiated as compared to what you can get out there among larger funds and obviously index products.
Yeah, that's great. That's really helpful. So before we dive too deeply into it, w would you say that there are some parallels between your former career as being an NBA scout and kind of evaluating potential investments?
Of course, yeah, I've spent some time writing about this and talking about it as well. And there are a lot of parallels, both on the uh, looking for great culture side and understanding how to dissect what makes an organization great or what makes an organization function well. And also on the people side, evaluating talent, evaluating the people involved in a business. Those two things in particular I think are very similar to what you have to do in the NBA as a scout and somebody who's evaluating talent at all times. And I think there are a lot of parallels and lessons to pull from each area. And I think it's an interesting setup that I started my career in that way, because sitting in on hundreds of player interviews and getting a chance to be in front of people and understand how incentives drive behavior and what motivates people, and trying to figure out how hard someone will work once they're on the team or once they turn professional, gave me a big leg up in terms of evaluating companies and management teams. And oftentimes the businesses that we're invested in really rely on the people involved. And I like to invest behind or alongside really smart, experienced people. And I like to have that sort of ecosystem built up around the company. And so oftentimes when I'm looking at a business or doing due diligence, I'll kind of recall my NBA days and look through old notes or try to unlock old patterns that were formed while evaluating kind of the more human or sports talent side of things.
Yeah, I really like that. So you mentioned looking for a great culture, great organization. What are some of those key traits that you like to evaluate? And I know you mentioned a good management team, but does that come in the form of being aligned with shareholders, being personally invested in the business, or what kind of form does that take for you?
Yeah, sure. Are you just speaking about management in a vacuum or businesses overall?
Businesses overall.
Yeah, I mean, I think there's a couple there's a lot to pull on there. I think excuse me, there are a lot of things that can define a great business, but the way I look at it is um the first sort of place I think is maybe the industry that the company's in. So trying to find kind of long-term themes that are growing, that aren't really dependent on economic drivers. That's very interesting to me. Um, we've made some investments in the waste management space, in the electrification of society, in kind of the aging of society, if you will, and a couple other themes, the shift to technology in like older industries. And I think that's a great place to start. Not that I'm a top-down investor, but just in terms of finding a good company in a good neighborhood, so to speak. And then looking for businesses with great business models, some kind of competitive advantage, something you can sort of build on in terms of a competitive advantage that widens over time, and lots of opportunities for a business to grow and change over time. And there are different aspects of moats and competitive advantages, obviously, which we don't have to break down one by one, but I really try to find companies that have that are very entrenched with their customers, that offer very high value props in terms of their product or service, and that have a chance to kind of grow pricing, volumes, margins over time based on what they're doing. And they have that sort of customer stickiness or lock-in allows that over time. And then I, really focus on the people as well. I think the CEO of a business is really important. It doesn't have to be somebody that I get to know personally, but in terms of a long track record of good decision making on the operating and capital allocation side, that's really important to me. I think just evaluating the leadership group in general is important, and kind of the organizational design of the company, whether it's sort of decentralized, whether it's sort of ruled by fiefdom, evaluating that structure and how the management team both plays into or is aligned with and interacts with the board, and how corporate governance is, I think is really important. A company's ability to kind of attract and retain talent over time says a lot about the culture and about the business. And kind of on the CEO side, I think taking taking that position, underlying it with the strategy and having the right leadership in place and the ability to execute is really important for what will drive a business forward. And in line with that, and evaluating the culture, it is very difficult, but I'm always looking for a culture where there's kind of continuous improvement. I really want to see multiple things when I'm trying to evaluate a company, one of which is how employees are treated. I think a big part of my time is spent speaking to employees or former employees of a company to get a sense of how the culture is, but also, what the business is doing to kind of improve continuously over time. That's a big personal philosophy of mine, and something I stole from the Spurs, actually, which is in all my documents, something about pounding the rock, which is just the pursuit of incremental effort over time and what that does to continuous improvement. And so I look for that as well. And on the CEO side, the people are really important. As I mentioned, they drive a lot of the results with the business. And so I really want somebody who's aligned with us in terms of they're invested personally in the business relative to their, let's say, base or cash compensation. They have a lot of skin in the game. Somebody who has kind of a vision about where to take the company, and somebody who can kind of bring people together, whether that's in the C-suite or employees or et cetera, and kind of inspire the people to do the job well. And so, and then we also want somebody who's kind of mentally flexible and who can change their mind or pivot strategy wise or operationally if there's necessary to. And so, I've learned over time that the best businesses kind of fit all of those sort of bullets that I described. And uh, I think the best companies or the best investments I've had have been way better than I thought they were, and the bad ones have been sort of way worse. And I think that's been a constant theme over time.
Yeah, I love that. I love that philosophy of continuous improvement. I studied Lean Six Sigma a good deal, which goes off of that a lot. But um, are there any industries that you tend to find those traits in companies and management teams, or are you kind of agnostic when it comes to industries?
I would say I'm agnostic, and I'm really, really bottom up focused on individual businesses. And so it doesn't matter to me too much the industry. Inversely, I will say that there are things I do avoid, such as heavily regulated industries or industries that are overly capital intensive, or where capital kind of goes to die. And that has kept me away from certain spaces, financials, utilities, most energy things. I'm not a huge fan of consumer related businesses, although I've made a couple investments there and have a few in the portfolio now. I think they're unique relative to that sort of industry. But Mostly, my favorite type of businesses are service businesses with some recurring aspect, and again, a very high value prop where there's a large amount of value being provided to the customer. There's maybe few alternatives. There's a long history of customer relationships and entrenchment, and an opportunity for the business to grow into the future. And so that has led me to kind of like toll booth based businesses, companies that have kind of again, where there's maybe few alternatives to the product or service, and that allows a business to grow their volumes and pricing over time, and introduces some pricing power. And again, where there's kind of customer lock-in, it's a good place to be, I think, on January 1st for any business where you don't have to start from zero in terms of your revenues, where you have long-term contracts or customer lock-in, or things that again allow you to keep operating and you have some visibility into what you're doing. And again, maybe with that comes pricing power. And so the portfolio has in some way moved, toward those businesses, and that's a great place for my search. That's a great place to start the search for good ideas.
Mhm.
But broadly speaking, I'm fairly open to most things if they hit on the criteria that we discussed earlier.
Yeah. So Darrow is focused on micro and small cap companies, and you mentioned that you get involved with that yourself. What do you think is kind of the value proposition of the micro and small cap industry as a whole? I like to ask my guests this and get a plethora of different responses. So
Sure, yeah, there's so well, number one, they're cheaper mostly than their large cap counterparts, so that's attractive to a lot of people, myself included. And there's, I think, more opportunities for inefficiency to find inefficiencies in this area. In the micro cap space, I think almost every single one of those businesses comes with an embedded discount, some deserved, some not so much. But the idea that there are less eyeballs on these names because larger funds can't invest in them, and there's less research coverage dedicated to them, and they're earlier in their life cycle, and there's all kinds of factors in place that, compared to larger companies, would perhaps introduce some level of inefficiency. And that's what's attractive to me, is that I've found one of the things I like to do is to find smaller businesses that can grow into larger ones over time. And I've had some success doing that. And in the small cap and micro cap space, it's a little bit easier to find, in my view, than maybe starting with a larger company. Now, I've probably been wrong about that over the last couple of years. We've seen businesses that IPO at $50 billion valuations, for example, to grow to become much larger businesses. And so you can find inefficiencies or mispricings anywhere, but I like this space for that reason, for sort of the embedded discounts that come from these businesses. And the industry has changed a lot in the last couple of years, or the last decade or so. The rise of passive investing has made it so people have people are most investors are passive participants, and they're less focused on price discovery. And the remaining sort of actively managed small cap managers or funds have exited the industry or have gotten very smaller. Fees have compressed, and the active management industry is I think shrinking, not growing. And so I think again, that speaks to the nature of just having less eyeballs on these companies. And oftentimes that can work for you and against you. But oftentimes when I come across a small cap business, the question I get a lot from people is like, what's going to cause this to re-rate, or what's the catalyst to get people to care about this? And I can't always answer that. I like to just follow earnings growth over time. And I still believe that stock prices move in line with earnings growth and returns on invested capital. I'll still hang my hat on that, but the idea that there are just less people involved in this space means that it's an interesting hunting ground for ideas. And so, the last thing I'll say is I do believe that, broadly speaking, small caps are lower quality companies than large caps for a variety of reasons. But within that, broadly speaking, there are certainly opportunities where that does not describe the companies that I like to invest in. And so you can find really good companies with the characteristics that I've described in the small cap space. And I like to see opportunities for them to become larger businesses over time.
yeah, and s on that note of opportunities, if kind of last question here, if you were to look ahead 5 or 10 years, are there any industries that you are excited about or think that investors might be kind of undervaluing or appreciating going forward? Kind of a
Yeah,
million dollar.
that's a great question. It's really hard to say. Obviously, we all know the popular themes and industries um, that are absorbing most investors' attention right now. Obviously, with AI and anything data center related, and even I would say something like cryptocurrency. I think are industries that will be very interesting to follow and watch unfold moving forward. There's very much a parallel in on the AI front. There are very much parallels to things like the dot-com boom and the railroad boom of the 19th century and the telecom build out of the 90s. Not exactly apples to apples, but pieces of each of those within AI. And I think personally, I very much look forward to investing sort of along that curve over time. It's been hard to find ideas that sort of fit the criteria that I'm looking for. And as most people know, even you can be right about a major technology or major shift in the world and still have a very hard time from an investment perspective in the early stages. And so I'm keeping an eye on that for sure. And if you were to look across the portfolio today, I don't think there's one specific theme or industry or sector where you could say, I'm really leaning into this or that. It's more, again, bottom up. But I think just in general, very lame answer. But the AI theme and the technology industry, I think will be really, really important to pay attention to over the next 5 to 10 years. And I'm kind of excited to see how things will unfold.
Yeah, I agree. I think that's a great answer. It's gonna, become a huge part of our society. But Adam, thank you again for taking the time out. I appreciate it. If anyone's interested in learning more about Greystone Capital, their website is greystonevalue.com. And if you enjoyed today's conversation, you can visit us at darrowir.com. Thank you all for listening, and we'll see you on the next episode of Small Cap Insights. Thanks, Adam.
Thank you.